Welcome, judges, investors, and our fellow finance enthusiasts, to the presentation of our investment strategy for Chicago Quantitative Alliance Challenge. Our team has come across from different branches of finance taught at Washington University in St. Louis, specifically Masters in Corporate Finance, Masters in Quantitative Finance, and Masters in Business Administration. In this presentation, we will essentially talk about our investment philosophy, our strategy for initial portfolio selection and the rebalancing, and the summary of results at different points in time. But before we do that, we would like to take a brief moment to introduce ourselves. My name is Vatsal Poddar, and I'm representing the Masters in Corporate Finance track. Before joining Washington University, I have some experience in equity research in a buy-side asset management firm.
I am Kinos, currently first-year Quant Finance Master student here at All-in Business School. Before coming here, I interned at an asset management firm. I am especially interested in the investment research.
My name is Echo Jia. I'm currently a second-year student at the dual degree program of MBA and Master of Finance at All-in Business School. My experience involved in buy-side equity research as well as private equity.
My name is Jing Ai, currently first year of Quant Finance at All-in Business School. Prior to All-in, I did several research on Chinese stock market, especially the index and index future.
My name is Bo, and I'm currently a Master of Quantitative Finance student at Washington University. Prior to my master's studies, I have internship experience in investment research and quantitative analysis.
I am Kevin Shen. Prior to my graduate program in quantitative finance, I have experience in asset management, and my future career passion is in trading. Now I'm going to introduce our investment philosophy for the competition. We constructed a long-short portfolio that follows a market-neutral strategy. As a result, its beta is strictly limited to within positive and negative 0.5 for the duration of the competition. Also, due to the relative short investment span, we took a short-term quantitative approach rather than a long-term value investing approach. For the investment process, we started off by examining the market cycle and have concluded that we are still in a momentum market. Based on this analysis, we put together an initial list of factors that we were going to backtest in FactSet. We tested these factors for the index Russell 1000 for the last 10 years. And the final three factors chosen are 6 months momentum, free cash flow to price, and return on equity. Then we assigned weights to each factor so that we could rank the stock screening results. We came up with an initial list of 100 stocks to long and 50 stocks to short, and then assigned to the analyst for further review. Once the portfolio has been constructed, we monitor its performance periodically and make adjustments based on changes in industries and overall market conditions.
We pick stocks from Russell 1000. Through model-based stock ranking, we select around top 10% of our screening results for long and bottom 5% for short. We also take into account industry diversification to reduce risk and the beta of each stocks to make sure our portfolio is market neutral. We monitor news frequently and rebalance our portfolio when we think there is going to be a major change in a specific industry or the market condition. We also rebalance our portfolio when our portfolio violates the rule of the investment challenge. The composition of our portfolio includes 60.9% of long equities, 36.9% of short equities, and 2.3% of cash. So far, we have produced a portfolio return of roughly 24% and achieved an alpha of around 10%. Our Sharpe ratio currently stands at around 2.0, and our beta is 0.06.
After discussion, we decided to use a multi-factor model to build up our portfolio. So we sat together to come up with the factors. The preliminary list of factors include from both the technical factors and the fundamental factors. The technical side, we have the 6 months momentum and also the 2050 MACD. On the fundamental side, we have the PE ratios, the ROE, and the EBIT over price, free cash flow over price, and also the capex over depreciation. And then we do the back test. How we do the back test? We just build up the portfolios according to each factors. For example, under each factors, we rank all the stocks and divided them into several fractals and build up the portfolio to long the first fractal and short the last fractal, and then evaluate the performance of each portfolio. The result shows that the portfolio we selected according to the 6 months momentum and the ROE and free cash flow over price performs much better than other factors. And then we do the further analysis. That is about the metrics. The metrics, the correlation matrix shows that the correlation between these 3 factors are really low. And we can see from the table here. And also these 3 factors cover almost everything. You see the 6 months momentum, that is because we have the 6 months horizon. That is the best indicator for the market trend. And then about the free cash flow over the price, that shows that the stock price is cheap. And the ROE, that is the earnings quality. So that shows that from the fundamental side, the company is good. So to conclude, we finalize the factors to 3, that is ROE, 6 months momentum, and the free cash flow over price.
We combine our factor by putting 40% on momentum, 40% on free cash flow, and 20% on ROE. The reason why we weight momentum slightly higher was that in our consideration, even though momentum might have a reversal in November, we believed that it will bounce back in the future. So, based on the result of our back test, we longed 32 stocks with 100% market exposure, shorted 12 stocks with 80% market exposure, and the estimate beta was minus 0.43. Since we ran the first screen, all companies have reported a quarter, and we find that we were in a momentum and quality market. During the first investment period, we made minor adjustments based on our processes. As a result, by the end of January, the return of our portfolio was 20.2%, the highest among all the teams, and the Sharpe ratio was 2.19.
Now I want to talk a little bit about our rebalancing strategy. Like Bo mentioned before, we only rebalance our portfolio under one of the 3 scenarios following. First of all, if there's a major shift in one of the industry that we have exposure. Secondly, if we detect that there will be a major change in the macroeconomy. And thirdly, is that if the requirement of the CQA is violated. We did 3 adjustments to our portfolio during the life of our portfolio. The first one happened by the end of the last year. We predict that there will be a major change in the oil and gas industry. Therefore, we reduced our short exposure in that sector. The second time is during the winter break. The beta of our portfolio was approaching the limit of the CQA's requirement. Therefore, we did another rebalance to maintain our market neutral strategy. And none of this reflect any of the major directional adjustments to our view on market. The third one happened by the end of January, that we believe that the entire market is coming out of a momentum market. Therefore, we collected new data, reassigned the weight to the 3 factors that we selected, and did an entire rebalance of our portfolio. And this rebalance strategy has significantly benefits our portfolio. Now, Vatsal will conclude this video by discussing our results.
So just to make this challenge a little more fun and interesting, we have been keeping track of our results on this board in our meeting room. Echo described the rebalancing strategy which we carried out on 4th Feb. Since then, here's the results that our portfolio has taken. We have had a 6.5 incremental compounded return since then. Our Sharpe ratio has also gone up from 1.70 to 2.00, and our alpha has really shot up from 2.85% to 10%. And I think this is just reflective of the strong commitment that we have to our portfolio. With that, I would like to put in the concluding remarks for our presentation. So if you ask us the question that were we ever tempted to deviate from our strategy, the answer to that would be yes. But in our investment philosophy meeting, one of the things that we decided was we are going to stick to our investment strategy. We spent a significant amount of time deciding our strategy and then started our portfolio. But our resolve was fairly tested in the initial few weeks of the investment challenge, where our portfolio had high negative returns. But we stuck to our strategy. And today, if you think back about it, our results have been fairly effective. On that note, we hope that everyone who's watching this video got some benefit out of it. This has been a great experience for us, and we would like to thank you for being a part of our journey.